Good morning, everyone. I'm going to do a follow-up on the markets, update of the markets, and see what pattern we're in, and where should we be looking for how this pattern is going to be playing out for the next few weeks. So this is the daily chart of the S&P 500 futures, and like I had showed you before, and I've been talking about this for quite some time. Is this head and shoulders pattern that it played out back in May, at the end of May, and it looks like from there we found a intermediate bottom, and from then we've been consolidating. We've been doing a consolidation type of pattern that lasted quite some time now. We've had almost 4 months, 4 or 5 months of this consolidation pattern, but it looks like all we were doing was just a back test of this neckline, this red neckline, like you can see right here. Let me go ahead and zoom in, and like you can see, not only the neckline coincide with this back test, but this uptrend channel, more or less, this yellow channel, it also uh, was used more or less as a resistance area. It also, you can see that it coincides with this rising wedge type pattern, and we broke down from this rising wedge already, and we came back and back tested it yesterday. Now, in the right before the market's not open yet, but it's looking like we're gonna have a down day, but the key really is going to be, I believe, what the news that come out from the Fed. Now, unfortunately, all this. Let me go ahead and do this right here. All this uh, consolidation type area right here. It's it's more or less that. It's just traders and the people that holding all the money, just waiting and waiting to see what the Fed is going to come out and say. I don't believe that that's going to do anything for this pattern, just because of how weak the technicals look all the way up, and how perfect this pattern is looking. Um, let's go ahead and look at some of the other indices. Okay, here we have the Russell 2000 futures, and here you can see more or less we've had similar pattern. This one hasn't made any new highs since since the breakdown in May. So this consolidation is more, um, what can I say? It's more constricted to where, to me, what that says is that since the small caps are not going anywhere, the real risk, the risk on play for the market is not there. Um, that also means that the people that are holding money, they don't believe in this rally. They really are not feeling comfortable with putting the clients' dinero or the money into risk. So let me show you a couple of things, like yeah, like the this whole consolidation. You've had contracting volume, and even though it is August still, which is usually the lightest time of the year for volume because everybody's on vacation, you still see a contraction of volume since June. Now you also see in the MACD moving averages lower and lower highs, um, and also now the stochastic just starting to shoot down. You see a little bit of a hook to the way up, but I don't think that's going to do anything. I think that we're just going to go ahead and roll over. But this is a good tell sign that that the risk on play is not there. It's not the market makers are not putting on any risk on the table. All right, here we have the NQ, which is the Nasdaq 100 futures, and like you can see right here, this push up, this push to more or less new highs. It's all more or less thanks to Apple, but if you can see, we're creating more or less the pattern that we see is here. It's an expanded uh, symmetrical triangle, which tends to be a little crazy just because it makes new highs, new lows, new highs, new lows, and just throws the traders or the people that have money, throws them for a loop. But again, you can see that the MACDs have made new highs. As a matter of fact, it has made a lower high from back here when we had the last high back in April, and even though we technically we have made a new high in price, the MACD moving average hasn't been able to make a new high. It's made a lower high, which it's an indication of that this is uh, a weaker rally that more or less will be reversing over pretty soon, as soon as I guess the market gets satisfied with what the Fed is gonna say. So okay, and the last thing I wanted to show you is the Aussie dollar against the US dollar, because the Aussie dollar tends to uh, uh, coincide with our markets. It rallies when our market rallies and falls down, rolls over when our markets roll over. As a matter of fact, the Aussie dollar tends to be a prelude of what happens to our markets. Because it is more of a volatile currency, more of a risk on trade. Like this is a weekly chart, and we've had more or less the same type of rally with the Aussie dollar, but now the Aussie dollar has finished its back test, and it's rolled over. We did a little bit of back test last week, and continuation, it continues to just head to making new lows. Now you can see that the on the MACD moving averages, again, the technicals is showing you that we're making lower highs on the moving averages. The stochastic on the weekly is already hooking, rolling over to the downside, and more significant is the bearish trend reversal here on the Arun indicator, which it has happened already, and when that happens, usually we get a counter trend bounce, which this is it right here. And think about this: this is a weekly chart, so it's going to take a little bit of a longer play to all this to play out, or longer term uh, to all this play out. So this tends to be, like I said before, a prelude of what happens to our markets. So this is significant because it's telling me that it's my ideas on or my analysis on what's going on to the markets are more or less correct. So this gives me another confirmation of what's going on in the market. So the next update, I'll probably touch up on the gold sector and the US dollar, and see the correlation between those two. And until next time, thank you for listening. This is directionalanalysis.com.